Good morning, everyone. A very warm welcome to the Deloitte webinar, Leading Finance with Resilience to Combat COVID-19. I trust that you are well, as most of us are in lockdown in Vietnam. What's a better way for us to do than to engage this audience? My name is Winnie Lam. I am the General Secretary to Hong Kong Business Association Vietnam, and I'm the COO of Colliers in Vietnam. As your host today, I will take you through the program this morning. I would like to start by thanking our guest speakers, Mr. Trần Quoc Thắng, Ms. Nguyễn Thị Thao Lê, Mr. Chan Van Tho, Mr. Nguyen Mạnh Nhật, and Mr. Tat Hồng Quân, and our star moderator, Mr. Brian Wong. Ladies and gentlemen, I did a very much math last night, and don't be fooled by their useful looks. There is a total of 75 years of experience in this lineup today, and thank you for being with us. We have very strong support from 8 national chambers in Vietnam with over 270 registrants for this morning's webinar. Allow me to take a moment to thank our supporters. BRICS Vietnam, CanCham Vietnam, the Council of Taiwanese Chambers of Commerce in Vietnam, Italian Chamber of Commerce, Indian Business Chamber, Malaysian Business Group, Singapore Business Group, and the Thai Business Vietnam Association. Thank you very much. Today's webinar consists of 3 presentations from the Deloitte specialist team. You can send in your questions throughout the webinar in the Q&A tab, but we will not be taking any live questions from the audience. A panel discussion will follow and will be moderated by Mr. Brian Wong, Director of Chinese Services Group at Deloitte Vietnam. As a matter of housekeeping, we have muted audio and your video of the audience, and I'll be monitoring the chat box throughout the event if I can be of help at all. If you encounter any technical difficulties, the first thing you should do is log out and log in again. Don't worry about missing any of the information, as the recording of the event will be made available after the event. Let me quickly introduce the speakers to kick off the event. A team of 3 speakers will take us through the first presentation on highlights in tax environment and practice. First on stage will be Mr. Chan Van Tho, Director, Tax and Legal. Tho has more than 18 years of experience in tax and business advisory service, including management roles. Being a tax professional, he provides services to a portfolio of local and international business operating in Vietnam in a wide variety of industries. Tho has comprehensive experience in licensing, merger and acquisition, international tax, corporate tax compliance, and tax planning advisory work. Without further delay, Tho, please take it away. Now, let me remind you, leave some time for your colleagues. If you're overrunning, I may interfere. And then followed by Mr. Tho, there will be Mr. Tang, who has more than 12 years experience in tax practice. He has excellent knowledge in tax compliance, tax advisory, tax controversy, tax treaty, and strong experience working with Vietnamese authorities. Last but not least, I have Ms. Nguyễn Thị Thao Lê, also a tax director. Lê is equally experienced and has over 12 years of experience in Vietnam taxation, especially corporate income tax matters, for a variety of taxation services, including tax compliance and planning advisory for different clients and industries in Vietnam. Lê has participated in various M&A due diligence projects to international and Vietnamese clients in a variety of industry and fields. Lê, also known as one of the leading advisors in tax structuring and restructuring advice for Vietnamese and foreign enterprise. So, Tho, the stage is yours. And as I said, I will prompt you to give way if you are overrunning seriously. And to the audience, enjoy the presentation.
Thank you, Winnie. Okay, thanks, Winnie, for your introduction. Good morning, everyone. Thank you for your time spending with us this morning. So I think for those who live in Vietnam these days, definitely we can feel the tension of the pandemic. And, we hope that the pandemic would get over soon. So I think with I think with the impact of the pandemic to the economy, we still have some bright side of the economy. We can see that here from the MOF forecast, the world economy in this year is still projected to be increased 6% compared to 2020. So I think this is a really good things to know. And then among ASEAN's 5, we would achieve the growth rate of around 4.3%. This is the forecasted growth rate, including Vietnam. Okay, and for Vietnam specifically, the government at the growth rate of 6%, of 5.8 to 6% this year. So I think this is a really bright side of of the economy, even though we are in the pandemic period. And then now we go to like the areas that have the direct impact on the enterprises. That is the plan of the government on the state budget in 2021. So the government plan to collect more than 1.3 billion VND. So this is the amount, and for the first half of 2021, we already achieved more than 58% of the target, equivalent to like 656,000 billion Vietnam dong. And this is an increase of 14.3% compared to the same period last year. We can also see that the number of inspections in 2020 is a bit reduced compared to the number of tax audit and inspection in 2019, but the amount of recollections is increased. So this gives a signal that the tax authority really focus on the quality tax audit, right? And now, in terms of tax audit, the tax authority and the Ministry of Finance plan to carry out around 19.5% of active enterprises for tax audit and inspection in this year, equivalent to like more than 103,000 enterprises. I think this is the target set from the beginning of the year, which has not taken into account the fourth wave of the pandemic yet. So I believe that this may be adjusted, and the tax authority would focus on the main areas, including the enterprises that have huge revenue and operate in retail business. They manufacture or do the trading on automobile, motorbike, and those who operate in multi-industry and those who have not been audited for many years. And the companies who enjoyed tax incentive and the company that are considered as high risk in terms of invoices, which include those who have claimed tax refund, VAT refund. The second group of focus for tax audit or inspection in this year include online business and game industry. The third group could include those foreign invested company and big corporation in Vietnam who have material or huge related party transactions. And especially those in loss positions for many years, and have profits ratios lower than the norms of the industry, right? And the fourth group of the target would be the companies who have capital transfer or the project transfer. So, and for the last 6 months, first half of 2021, there was like more than 32,000 cases that has been audited. And this is an increase of 10% compared to the same period last year. And also because of the pandemic, the number of, the way that the tax authority conduct audits would also be different. They increase the number of at the desk tax audit or inspection. And for the first 6 months of the year, there have been like 323,000 tax declarations has been reviewed and audited at the desk. Okay, and the total proposed tax adjustment through tax audit and inspection for the first half of the year reached around $1 billion US dollar. I think let's take the US dollar amount for ease. Okay, and I think now we would, focus on the areas where Vietnam government who focused to encourage and to support the business community during the times of pandemic. Firstly, tax incentive could be granted to strategic projects, including the companies that has projects operating in supporting industry, research development centers with a total investment capital of more than 3,000 billion VND. Third group is like investment projects with huge investment capital of more than 30 billion VND, or the projects that operate in specialized and incentivized industry, including high techs, or those who have technology transfer, and those who participate in the supply chain, and those with high added value. So those projects would be able to enjoy the tax incentive of, preference, including two parts, right? One is preferential tax rate. The standard tax rate is 20%, but if they operate in these strategized projects and incentivized projects and eligible for that, then they would be able to enjoy like 5% or 10% tax rate. And they would be able to entitled to like 4 to 6 years of exemption and 9 to 13 years of 50% reduction. And also they may be entitled to duty exemption for the machinery that import to create fixed assets, land rental incentive, and capital support, including the reduced interest rate. Vietnam also focus on the digital transformation. So to ensure that the government can support the business community. So digital transformation is also a trend. And the government would focus also to implement international commitment and practices. This is to ensure that Vietnam catch up with the international standard, because now Vietnam play in the international playground already, right? And then to reduce the impact of climate change. So Vietnam also focused to the programs who provide sustainable development for the economy and the country, mainly to reduce environmental pollution and also to increase the equalities of gender. So I think that is my part of the presentations. Thank you for listening. And now I pass the presentation to my colleague, Mr. Trần Quốc Thắng, who would provide you with the highlight on corporate income tax and other taxes related to the pandemic period. Now to you, Thắng.
Thank you very much, Anh Thọ and Winnie, for your kind introduction. Good morning to everyone. It's great to be with you today. My name is Trần Quốc Thắng. Currently, I'm Tax Director of Deloitte. I've been with Deloitte more than 12 years. And today, I would like to summarize the key policy from the government to support the company as well as the individual who are impacted by COVID-19 in 2021. For the number one, I will talk about the Decree 52 about tax deferral in 2021. Accordingly, similar to last year, this year the government issued this decree to allow for certain extension of deadline to VAT, CAT, and land rental fee. On that basis, for the VAT, the government allow another 5 months of extension. For VAT, allow another 3 months of extension, and for land tax of another 5 months. I have to say that if we look at about the sector impacted by COVID-19 and also eligible for tax deferral, it seems that more than 80% of business sector who are eligible for those benefits. And I think that most of company already registered for extension. And this year, the government will continue to consider further tax reduction at the year end. And we are waiting for further guidance from the government. For number two, is about the support from government to company and enterprise who impacted by COVID-19. From July 2021, the government approved the budget under Resolution 68. Accordingly, the government approved a budget of 26,000 billion VND or the package for sponsoring to the employee and enterprise. The focus of resolution will provide some reduction social security contribution from the employee and employer. And the government also provide the support to employees who are jobless during the COVID-19. And the government also focus give the free of charge loan from commercial bank to you for paying salary to employee. I think that with this policy, a lot of people will have more chance to get more support from the government to support their life and also maintain their business to overcome this difficult situation. For number three, the tax deduction policy for any contribution from the company to the vaccine fund of Vietnam or to the fund of defending COVID-19. On that basis, if the company have many contribution to the government, so those contribution can be deductible for CAT calculation. If the company can maintain sufficient documentation and evidence for such contribution and for any expenditure incurred by the company for that contribution. I have to say that based on my experience and discussion with my client and the community, I understand they are really appreciated for the support from the government. And I believe that with those support, our community can soon back to normal situation. And for today's session, I will cover a few rulings issued by the Central Tax Department and also the local tax authority regarding the tax treatment in terms of the expenditure incurred for COVID-19. The number one is the depreciation expense of fixed assets during the suspension of business interruption. This is a point quite controversial in the law, but with this ruling, the government say that depreciation expense can be deductible during the period of suspension, and the company need to maintain the documentation and evidence for suspension. The number two is about the cost for isolation of people during the quarantine period. Yeah, you may know a lot of people suffer when they got positive with COVID-19 and they must send to the quarantine place, and the company have a lot of cost to sponsor them during periods. So those costs can be deductible for CAT calculation. However, for expatriates who work in Vietnam, but for those who don't have the work permit, so those costs may not accepted for deduction. So please remember this point to ensure that you obtain work permit for expatriate as soon as possible. The next ruling quite important is if the company incur expenditure for defending COVID-19, for example, buying necessary equipment or tool for COVID-19 prevention, so those costs can be deductible for CAT calculation. And for BAT, those expenditure would not taxable for employee taxable income in the year. In addition, if the company incur the salary to pay to employee who work at home or who could not work because the company needs to stop operation, so those costs also acceptable for the CAT deduction. This is quite important ruling for expatriates who stay in quarantine after they come back to Vietnam. So if they quarantine in the quarantine place required by the government, so if the company sponsor cost to them, like the hotel, medicine, food, or daily support to them, so those costs also deductible for the CAT deduction. However, remember that those costs would be the taxable income for BAT calculation. And this is important ruling from the Biden tax department. It says that if the company needs to arrange people to work at late, mean the company side and stay there because they're not allowed to go back home. So the cost for hotel, for traveling, for cash allowance, for push during the time they work at the company side can be deductible for CAT calculation. Remember that for cash allowance to employee, no amount will be included the taxable income of employee. So I think that by on those information, I strongly believe that the government has a lot of benefit, provide a lot of benefit to the company who impacted by COVID-19, and I hope that we will soon get over this situation. And now I end my presentation today, and I hope that those information can be very helpful to all of you. And for the next session, I would like to invite Ms. Thảo Ly, our director, to present with you some updates on the value-added tax, invoice, and foreign contractor withholding tax. So over to you, Ly. Thank you for your attention.
Thanks, Tang, for the transition. So hello, everyone. My name is Ly. I'm a tax director in business tax in Deloitte Vietnam. Today, I will cover two parts with you for this morning section, which is the value-added tax and invoice first, and then the foreign contractor withholding tax. For the first section, that is the value-added tax and the invoice. Firstly, for the e-invoice, we know that for years we've been confused about the guidance, which is overlapping for the invoice and e-invoice. Right now, we have clearer guidance, which is we know that for the time being, we need to follow Circular 32 and Circular 68 until 1st July 2020, so which is next year. The decree 123 issued on 19 October 2020 say that we need to use the e-invoice at the compulsory requirement from 1st July next year, and all of the pre-printed, the HKBAV invoice can continue to be used from now until that time, which is 1st July 2022. This is the important note. Here are some highlights of the key updates from Decree 123 that I would like to notice to you in particular when you have some problems with the e-invoice. Now I have 3 scenarios. First, what if the invoice not been sent to the buyers and we find out that the invoice have problem? So here is the solution. Then you need to inform the tax authority by using Form 04. The tax authority will cancel the wrong invoice on their system. And the second thing, we need to issue a new invoice to replace. The second scenario, what if the e-invoice been sent to the buyers and we figure out the e-invoice have problem? There are 2 cases when the information which is not correct on the e-invoice is not material. For example, the buyer name or the address is wrong, but the tax code and all the information, which is the important information on the invoice, are still correct. What should we do? We need to do a few things. We need to inform the buyer of the errors and inform the tax authority of the wrong invoice by using Form 04. With Decree 123, we also need to do such procedures. However, for the Form 014, we only do unless data is not yet sent to the tax authority. The scenario 2, what if the tax code and amount on the invoice are wrong? Then right now, what we need to do is 3 things. We prepare the minute or agreement specifying the errors. Number 2, we inform the tax authority again by using Form 04. The tax authority will cancel the wrong invoice on the system, and then we issue a new invoice. But from next year, July, with Decree 123, the procedure is more simplified, which is we need to do either we issue the invoice to adjust the wrong one, or we issue a new invoice to replace the wrong one. And then we prepare the minutes and agreement specifying the error. This is not required, it's the recommended for the companies for better management. And the final scenario, what if the invoice, the wrong invoice detected by the tax authority? Then right now we need to do 4 things. We inform the seller within 2 days of receiving the notification of tax authority. Seller need to inform the tax authority by using Form 04. Thus, we need to issue and send new invoice to the buyer. And if the seller do not notify by using Form 04, the tax authority continues to notify. With the Decree 123 next year, we need to do only 3 things. We inform the seller. We send Form 04 to tax authority about the examination of the errors. And finally, after the deadline specified in the second notice, if the seller fails to give notice to the tax authority shall consider carrying out the inspection of the seller using the invoice. Some of a new guidance I would like to specifically notice to you. The first is time to invoice declaration. So we will declare the invoice based on the day of issuing the invoice, not the date of signing the invoice. Second, when we have the goods being transported on the roads, we don't need to have the invoice as the requirement for inspection anymore. And next is the time of invoice issuance for provision of service. So we need to issue the invoice upon service completion or cash deposit, except for this case, for example, accounting, audit, financial consulting, and so on. In this case, we don't need to issue the invoice when we receive the cash deposit or advance. And final, when we have the goods lent or borrow, we need to issue the invoice. And a few more guidance for the VAT and the invoice as well. When we previously, we normally have the invoice with only one description. And we attach at the support document, so describe owner of the goods and service purchase. But now with the invoice, it's required that owner of the information of goods and service need to be stated in the invoice. And what if we have the buyers who are the individual, then they don't have the e-signature. Now we have the guidance saying that if the buyers are the individual, then we don't need their signature on the invoice. For the sales discount, the invoice for the sales discount is just similar to the sales discount for the printed hard copy invoice. And final point I want to update to you is some guidance on the foreign contractor withholding tax. Let me move back. Sorry, I think I have some lacking in terms of my network. Try to move next to the FCWT slide. So anyway, I think some problem with my network. We will send you the slide anyway, but for the foreign contractor withholding tax, I have just a few more guidance for you. For the foreign contractor withholding tax, firstly, if the foreign entity received the compensation income from the Vietnamese entity, so right now we have the clear guidance that the compensation income for the foreign entity will be subtracted to the foreign contractor withholding tax at CAT portion 2% and no VAT. Second guidance is that if we transfer the project, which is the processing contract, so that the transferee will continue to carry out that processing contract. So the transferor, in case the transferor is the foreign entity and having income from that transfer, then the tax authority say that should transfer, even though that is the transfer of the processing contract, will need to be subject to the foreign contractor withholding tax in Vietnam. However, right now the guidance does not say which the foreign contractor withholding tax rate applicable for that transfer. And the final guidance is that for the international transportation, in case the foreign transporter transport the goods from Vietnam to the overseas, then that activity will be subject to the foreign contractor withholding tax at the corporate income tax portion 2%, and no VAT. In case you are not qualified for no VAT, then the corporate income tax 2%, and then the value added tax 3% will be applied. So that is the end of my section. Now I will move to my colleague, Mr. Nguyễn Minh Nhất, who is the custom manager, who will continue with the custom section. Thank you.
Wow, I am shocked. All my tax directors are very on time with their presentation. So thank you very much, Tang and Lei, Deloitte Fabulous 3. And don't forget to send in your questions so Brian can be prepared for the panel discussion. Please put your questions into the Q&A panels. We actually have Deloitte experts monitoring the questions, and they may be answering you right away online. Next up is Mr. Let me see here. Now, we're not taking a break, unfortunately. He will be coming up next to share about noticeable sharing on custom practice and development. Yet has more than 6 years experience in tax advisory services, focusing on customs and global trade matters. Yet is your go-to specialist, supporting and advising companies in various issues related to custom finalization report, customs valuation, HS code classification, COO utilization, special import controls, and post-clearance customs audit. So there you go. Take it away.
Okay, thank you, Winnie. Thank you for introductions. Good morning, everyone. My name is Yes, Custom and Global Trade Manager at Deloitte Vietnam in Ho Chi Minh City office. Thanks for joining my sharing today. Today, I want to kick off the custom update by sharing a snapshot of custom duty collections of the first half of 2021. The custom duty target this year is over 300,000 billion. In the first half of the year, the custom have collected approximately 200,000 billion, completing 62% of the set target, in which the top 5 custom departments with the highest custom duty collections in order as Ho Chi Minh City, Hải Phòng, Hà Nội, Bà Rịa Vũng Tàu, and Bình Dương. In nationwide, the most focus of custom authority for duty collection comes from import-export activities of electric devices, computers, textile and garment, chemical and product industry. In the second quarter of the year, because of the outbreak of COVID-19 in Vietnam, number of audits seem to be decreased. However, in the third and the fourth quarters of the year, we think the custom will more focus on custom audits to review compliance status of the company. And also they want to complete their targets of custom duty collection. Next slide, please. In the first half of 2021, there are several important custom regulations issued in Vietnam. Today, I want to share with you on updates related to Decree 18. Decree 18 has been effective from 25th April of this year. Decree 18 has some significant changes such as in Article 10 and 12, it allows for duty exemption goods being outsourced for processing can be entitled to import duty exemption. And also in Article 10 and 12, when the company registers on-spot import for export processing, can be entitled to import duty exemption. However, if the companies register for other purposes, the companies have to make the payment of import duty, and later on, they can apply for the refund where possible. Another article is Article 28A. The custom has set the qualification condition for EBE. Specifically, EBE now need to have friends that separate EBE from outside. EBE also need to have gates dedicated only for goods go in and go out of the EBE area. EBE also need to have the camera to inspect the goods 24/7, and the images of the camera will be kept in 12 months and sent to the custom as well. And the last one, EBE also have to management software to record the movements of the goods in and out of the company. In addition, under Article 28, for EBE. They are guidance for process for newly established companies to apply the EBE status. The process for those companies under operations in Vietnam for a long time, and now they want to convert into the EBE. And also the process for those who are EBE already to notify the custom for their qualifications on EBE condition within 1 year from 25th April 2021. The degrees 18, there are other articles as well, such as Article 3, 14, 31, and 34. If you want to discuss further on these articles, we also have interest to discuss them with you. Next slide, please. In addition to the Decree 18, in middle of July this year, GDC issued another guidance for on-spot import under export manufacturing scheme, in which GDC provides 3 following scenarios. Scenario 1, where the goods sold and transferred from EB to non-EB in Vietnam, the goods will be entitled to import duty exemption. And in the scenario 2, where the goods sold from EB to overseas and then will be on-sold to non-EBE in Vietnam. However, the physical movement of the goods will be from the EBE to non-EBE in Vietnam. This would also be entitled to import duty exemption as well. And the last scenarios, the scenario also similar to scenario 2 in sale transaction. However, the goods be moved from non-EB to another non-EB in Vietnam. In this scenario, the importer of the goods will have to make the payment of import duty at the time of importation. We think Decree 18 and its official letter have provided many important guidance on import-export duty. To enjoy the exemption benefits, the companies need to follow and maintain the conditions and regulations. Next slide, please. For good imports for export processing or manufacturing, there is a requirement under the current custom regulations now for annual submission of the custom finalization report on the movement of raw material, finished goods, and reports on the actual production bill of material. The reports had to be prepared and submitted to the custom in charge of the company within 90 days from the fiscal year. Or if there is any change in the business operations, for example, after M&A or company restructuring. If the requirement for reports are not followed, the companies may be subject to the administration penalty or even subject to the post-grant custom audit to review the compliance status and also the condition to entitle to import duty exemptions of the companies as well. It may lead to some significant impact on the company's duty collection as well. So this is my sharing for today for the custom updates on the first half of the 2021. Next one, Mr. Hồng Quân will give us updates on TB regulations. Now, hand it to you, Anh Quân.
All right. Before Mr. Kwon is allowed to speak, allow me to thank Mr. Yat for the great presentation. I hope you have paid attention, but promise you no quiz at the end. Mr. Da Hong Kwon will bring up the rear. He will cover transfer pricing, look at and look forward. Kwon has 10 years of experience practicing tax in Vietnam as a technical specialist in the field of transfer pricing with the Big Four, consulting of transfer pricing risk and risk assessment, compliance, audit assistance services in various industries. Kwon is also deeply involved in a wide range of global BEPS projects, So Guan, it is yours. Don't break the streak. Everybody has been very on time. All eyes on you now. Take away.
Thanks, Winnie. Good morning, everyone. Today I'm going to give a very brief highlight on what changed in the transfer pricing regulation. If we go to the next slide, we'll see that the legal landscape of transfer pricing has changed a lot during the last 12 months. We can, if we go to, could you please move to the next slide? We can see that Decree 132 was issued last November, replacing Decree 20 on tax administration for enterprises incurring related party transactions. And there's also a Circular 45 issued last June, guiding on the application for advanced pricing agreement as well. But for the purpose of today's session, I would just focus on what changed in the Decree 132. We can see that Decree 132 it would be considered as a very strong development of the Vietnam transfer pricing legal landscape, because it refers very much on the transfer pricing guidelines for the multinational enterprises and administration in 2017 of the OECD. And it's also referred to the BEPS Action 13 and also BEPS Action 8 to 10, aligning transfer pricing outcomes with the value creation. If we go on the next slide, there are we have presented all of the changes that occurred in Decree 132, but for the purpose of today's regulations, we would not go through all of the points. Please move to the next slide, the next one as well. For today's presentation, we would just focus on we would just talk on the uplift of the lower threshold of the arm's length range of Vietnam regulations, the change of deadlines for providing TP documentation in the case of tax audit or transfer pricing audit. I would spend some time on explaining about the guidance relating to the country-by-country reporting in Vietnam, and I would like to re-emphasize on the substance and the value creation in connection with the related party transactions. If we go to the next slide, we go to the point number 3, which is the uplift of the lower threshold of the arm's length range. As you can see here, we have already demonstrated quite clearly that the Vietnam's arm's length range in the new regulation has
Looks like we have lost Mr. Guan for a moment. Hopefully he can be back on right away. Give us a second to manage the technical issue. He is reconnecting. Once again, let me just tell everyone, if you have a questions, please put it into the Q&A tab at the bottom of your screen instead of the chat function. If you're in the chat function, we are unable to answer the questions from the panel. So please put your questions into the Q&A tab. You can remain anonymous or you can use your name. We have a panel more than those other than the speakers who are sitting there waiting to answer your questions directly. Gwen is still connecting. Deloitte team, do we need to do a hostile takeover?
Hi, Supratik here.
Hi, Subatek.
So I'll take over till the time one is not there online. So is that okay?
Thank you.
Yeah, sure. So as per the revised TP regulations, what we can see here is the earlier it was an interquartile range, meaning the lower quartile was 25% and the upper quartile was 75%. But now this has been uplifted. The lower quartile or 25th percentile has been uplifted to 35th percentile. And therefore, what we can see, if you see that example, if in the lower quartile was 1%, based on the revision to 35th percentile, it will be 1.2%. So in effect, what happens is the arm's length range is narrower. So let's say the tested party or the client or the taxpayer profitability was 1.1%. In that case, based on the earlier regulation, you will still fall in the arm's length range because you're higher than the 25th percentile, which is 1%. But based on the new regulations, if you are at 1.1%, you will not be at arm's length because it is lower than the lower end of the arm's length range, because the lower end of the arm's length range is now 1.2%. So that is one important change which has happened. And this is applicable for the first time in 2020. So meaning this is applicable for the first time in the TP report of the year 2020. So till the year 2019, the arm's length range would have been 25th percentile to 75th percentile. But from 2020, it has become 35th percentile to 75th percentile. So this is a significant change. And although in the example, we see that the change is not too much, but this is just an example. I would like you to note, in reality, for other clients where the values are larger, this change can be much more significant. Instead of 1% becoming 1.2%, this can actually be significantly a broader or a larger change. So yeah, over to the next slide, please. So other than that, another major change which has happened is there has been some changes in the timeline for submission. As far as the TP declaration forms, the timeline is not significantly different. It is still 90 days after the end of the financial year. But as far as the TP documentation is concerned, which is required to be submitted only upon a tax audit, it is still subject to the law on inspection. And as per the law on inspection, the revision is that any consultation, if there is a consultation before the tax audit, it will be, you have to submit it within 30 working days upon receiving the official request. And there is a one-time extension which can be allowed. So if the taxpayer is not ready to file the TP report within 30 working days, he or she can ask for an extension of another 15 working days. So this is another change. So maybe we can move on to the next slide. Next slide, please. So yeah, thank you. So I will not spend too much time on this because this in itself is a session in itself, because there has been earlier there was a lot of confusion as to what is the role and responsibility of the Vietnamese taxpayer and what is the role of the Vietnam Tax Authority as far as the country by country reporting is concerned. So broadly speaking, there are, to start with, the regulation starts with whether the GUP or the group ultimate parent entity, whether it is located in Vietnam or whether it is located abroad. So as you can see, where the slide starts with is case A, where the GUP is located in Vietnam. Then if you move on to the right hand, if you look at the right hand part of the slide, you will see that the GUP, which is located in Vietnam, is required to file the CBCR. Now, that is pretty straightforward, but the complication arises when the GUP is not located in Vietnam, but is located in a foreign country, or where we have mentioned it as country X. Then the next question to answer will be whether the GUP designates a reporting entity. Now, if that reporting entity which has been designated by the GUP is a Vietnam tax resident and the taxpayer is a reporting entity, so why this point comes in is it is possible that there are multiple taxpayers in Vietnam. So if you are the taxpayer which has been designated by the GUP, then we come to case B3, wherein that particular taxpayer will have to file the CBCR and also will have to notify the Vietnamese tax authorities. Excuse me. So the second option is where the GUP designates a reporting entity and the reporting entity is a tax resident in a foreign country, and that particular entity is required to file the CBCR in that particular country. In that case, it will be case C, wherein the Vietnamese entity is just required to notify the Vietnamese tax authorities. So like that, we have many other possibilities. I think in the interest of time, Winnie, do you want me to go through all of them, or should we, skip on and move on to the next slide?
Well, it is for you to control, Soup.
Sure. I think we still probably have one more slide. So I'll rather move on to the next slide and we'll be happy to answer any specific questions at the end regarding CBCR. So another important part, which the Vietnamese transfer pricing regulations have tried to tackle is by aligning itself to the BEPS action plans, especially the action plans pertaining to Action Plan 8, 9, and 10. So the focus is more and more on value creation. So what do I mean by that? Is that entities or jurisdictions where the value is created, the profitability of those entities or more and more profit should reside in those entities. So let's say the Vietnamese entity is a low-risk distributor and its parent company is a manufacturer which also owns the intellectual property for manufacturing the goods, ideally, the Vietnamese entity will be eligible to retain only a very insignificant or a small portion of the overall profit that is generated out of the, or generated in the entire supply chain or in the entire value chain. So let's say, for example, once again, in our example where the Vietnamese entity is just a low-risk distributor, just buying from its parent company, which is a manufacturer, and selling it to third parties in Vietnam, it should be entitled to a nominal or low cost plus markup. So, of course, what exactly should be the markup should be determined based on a benchmarking study, based on the level of distribution function being performed by the Vietnamese entity. But yes, definitely out of the overall profit generated in the value chain, the Vietnamese entity will be having a much lesser share of the pie as compared to the parent entity, which is doing the manufacturing activity. So this is just an example of how the value chain has got reorganized and the focus is now shifting to a value chain. On the other side, if the Vietnamese entity is actually doing something which results in any intellectual property being created in Vietnam, then of course the picture changes significantly, wherein the Vietnamese entity will be expected by the tax authority to keep a larger share of the overall profit pie that is generated out of the supply chain. So yeah, that's about this slide. So can you move on to the next slide, please? Yeah, I think I've already covered the contents of this slide as well. So please move on to the next one if there is any. Okay, so I think I'm done with our presentation on transfer pricing. Over to you, Brian.
Thank you so much, Mr. Supratek Mukherjee, who is Senior Manager of Transfer Pricing. I am very grateful that we have standby. And I think Mr. Kwon just escaped because he knows he will overrun. But let's give him another chance. Quickly, let us bring our speakers back to the panel discussion, led by Mr. Brian Wong. Brian has more than 17 years of experience. He was involved in a wide range of external audit assignments, which include the annual audits of local and multinational clients. Brian also has experience in providing tailored support to Chinese-speaking clients, from market entry strategy to ongoing support, together with his tax advisory and assurance colleagues. Brian, the next 30 minutes or so is for your control. Please ask tough questions, or I may have to jump in if you are too nice. Joining us are Mr. Tang, Mr. To, Ms. Lei, Mr. Kwon, if he doesn't drop off, and Mr. Yat. Brian, it is for your control. Take it away.
Thank you very much, Winnie. I think our team has been doing a fabulous job, like answering all the questions live. But for the audience sake, then maybe I'll choose some of the questions to let the speakers to answer that, to let people know what's the answer like. For example, like now you guys know that we are in a lockdown period, and if the company provide equipment to the staff to work from home, for example, like a laptop, desk, monitor, chairs, are these deductible in the CIT? And would this be personal income tax taxable? I think Kang, maybe you can answer these questions.
Please, thank you. Yeah, actually, as I mentioned earlier in the slide, now the tax authority, they are give more flexible treatment to the cost for COVID-19 defending. Okay, so any cost incurred by company, we clearly mention the purpose of defending COVID-19, for example, vaccination, testing, food, allowance. So it can be treated deductible for the CIT calculation. Yeah, and for this deduction also subject the gap of well-being, that means one salary average over a year. Okay, but technically I think that if the cap is huge, so all the relevant cost can be deductible.
Oh, okay.
Yeah.
So it will be subject to 1 month staff welfare.
Yes, because I have some ruling. They confirm at this moment about that well-being cap, but I think that there's some enterprise they to write up this question that maybe put at the normal expense of the company. It's no longer a cap, but we did not have any specific guidance from the central tax authority. Whenever have a new guidance, we can share with all of us. Thank you.
So let's say it exceeded the 1 month staff welfare cap, then what happened? Will it be non-deductible?
Yeah, definitely non-deductible because we have a formula in the circular of CAT. They say that below cap, fully deductible, but any exceeding above the cap would be non-deductible. Please note that for a VAT portion as well, if the VAT attributable to exceed the amount, also not deductible. Yeah, please consider and remember to apply properly.
Very interesting. Another follow-up question regarding for COVID-19, like nowadays like government have been supporting maybe by cash or by in kind to the people here in Vietnam. Then are those support from the government subject for personal income tax?
Then Thor, do you have any comment for that?
I think basically when it is the support from the government to the employee itself, and the money is taken out of the state budget. So even though it's no clear guidance on whether that is taxable for personal income tax, but I strongly believe that it could be exempted because that money is taken out of the state budget to support the employees, and it couldn't be any sense if they tax on the amount that they provide. So
okay,
yeah.
So do we need to wait for further circular on this, or this is a sure
I
answer?
think, of course, in Vietnam, we all know that there is no black and white, and I believe it would be benefit for the company if we get the clarity on this part for by way of seeking a ruling from the tax authority. Okay. Yeah.
There's another very interesting question. Well, we all know that for the foreign digital service provider or those e-commerce platform, they might need to register to file for FCWT in the future for the draft decree. And the question is about like, do they need, in that case, do they need to file local file, master file, or CBCR? Are they treated as an entity in Vietnam to do the transfer pricing compliance? So Kun, maybe you can take over on this.
Thanks, Brian. That is a very interesting question. According to the Vietnamese regulation, then only the taxpayer that register for corporate income tax in Vietnam should be required for the compliance with the transfer pricing documentation filing. But the decree 132 they add a very I can say a very strange very strange appliance to those that having that paying the withholding tax in Vietnam. But when we ask the policymaker, when we ask our contacts at the GDT, they absolutely have no idea how it would apply and how those related party transactions would be declared under the forms of that is provided by the regulations. So I would say that those entities they can still prepare just for the sake of request from the local tax authority, but I don't think that it would apply.
Okay. Yeah, but stay tuned for our tax newsletter. Maybe in the future when there's a new update, then we'll post online. You can scan the QR code on the screen, and it will lead you to our website. Okay, let's follow by another questions that let's talk about the tax incentive. That we know that the new degree, they allow those supporting industry companies to apply, even though they have already implemented before 2015. If they have fully utilized their tax incentive that being granted before, i.e. maybe based on locations or based on their products, are they still able to apply for this supporting industry tax incentive, Thắng?
Okay, it's very interesting question because I'm really excited with this area because Deloitte also contributed a lot of commitment to form up this degree. And the question is whether we can apply tax incentive for the project set up before 15 and all incentive are fully utilized before 15. But on the spirit of the degree 15.7, yeah, it can be possible for the company to apply for tax incentive. For now, the company, if they accept and think that they qualify for ratify supporting industry, so they can apply for the SI certificate from Ministry of Trade and in Trade, okay, MOIT, and then by on the day of certificate, they can start to apply the tax incentive for remaining barriers. Okay, for example, if they have the certificate within this year, so they calculate the whole scheme of tax incentive barriers and minus the time they already utilize the reverse incentive tend to eventual incentive location. Yeah, so yeah, they calculate remaining from 21 and moving forward. Yeah, so technically yes, they can apply for SI incentive. Yeah.
So I think I can elaborate a bit on Thang's point. Let's say, right, a company that operates in SI industry, and they have a new project in 2010, right? And at that time, they coincidentally, they located in the incentivized location, and they have 2-year exemptions and 4-year 50% reductions. And now in 2021, they recognize that, hey, I can, apply the tax incentive for supporting industry. And they apply, like Thắng say, the SI certificate from the MOIT. And from the time that they were granted, which means from 2021, they would be able to entitled to 4-year exemption, 9 years of 50% reductions, and 15 years of 10% tax rate. 10% tax rate. So with that, they can take that tax incentive, they minus whatever they have entitled to in the past, which means 2-year exemption, 4-year 50% reduction, which means from 2021, they can entitled to the remaining of 2-year exemption, 9 minus 4, which means 5 years of 50% reduction. And then the tax rate of 10%, it's still applicable from 2021, for 15 years, because it was not be entitled to in the past. So I think that could be the case under the new degree. Yeah.
So put in a layman terms that if your company have been set up in 2010 or your project have been 2010, so you need to calculate like for the remaining years, now you're already 2021. If you start apply now, maybe you get in 2022, and most likely you only have maybe 4 years left to enjoy the tax incentive, right?
Yeah.
Okay, so okay, yeah.
No, I don't think so. I think from the time we get the SI certificate, the tax incentive will be calculated from that time. Which means, let's say 2022, you have the SI certificate. So the full tax incentive of 4-year exemption and 9-year 50% reduction would be calculated from 2022, right? And then we take that, we minus whatever we have been entitled to in the past, 2-year exemption, 4-year 50% reduction.
Oh, okay. So use that whatever you get and minus what you have already enjoyed.
Yeah.
That will be the last.
Yes, starting from the time that the SI certificate is issued. Yeah. I think this is I like Thắng say, I understand that this is the effort, the huge effort that the Deloitte team has been working with the MOF to, to lobby for this policy for the business community.
Yeah. Are we doing a commercial now? Okay, I think we still have time for another 1 or 2 questions. Like Miss Lee, so since you have touched on e-invoice, some of my clients have been asking like like when they deliver goods on the road, and then sometimes will be checked by the inspections team, and then they will need to show on the paper invoice. After the applications or implementation of e-invoice, do they still need to print out, or they can just show the e-invoice to the inspection team on their phone or their tabs?
Yeah, thanks, Brian, for the question. So from now on, the company does not need to bring out the hard copy of the invoice and then give it to the police, for example, when the police check the goods on road. However, they can show the link, which they can click on that link that shows the invoice version of that invoice. That would be fine and accepted for now, based on the latest guidance.
Okay. So that's interesting. And last questions, right? When talking about like invoices, right? I mean, sometimes like service provider like Deloitte, when we receive the deposit from customer in advance for the service that we have not provided, so is the company required to issue the VAT invoice on that?
Yeah, actually, I have come across this question a lot of time by the clients. Lots of clients pay this and they don't know when they should issue the invoice for deposit or advance, and when they don't need to issue the invoice. So I think the rule of thumb should be like this: you need to check the nature of the deposit or invoice. If for simplicity like this, if the deposit or invoice is not refunded, so which means that it's a part of the contracted amount, and in that case, that deposit or invoice will be received by the seller anyway. And in that case, the seller needs to issue the invoice for the deposit and advance. And of course, the contract needs to stay. The deposit or advance cannot be refunded. It's a part of the contracted amount. However, if the deposit or advance is refundable, then in that case, the company does not need to issue the invoice or the invoice for the deposit and advance at the time they collect that amount. However, as I mentioned earlier, for some exceptional service like the audit service, like the consulting service, when we receive the deposit or advance, we don't need to issue the invoice.
So the key point will be whether the deposit are refundable or not, right?
Yeah.
Okay. Right. Before we do the closing up, there's one question I can't help to ask because it's very, very interesting and very, very hot. That for the global tax reform recently, like they mentioned about the pilot 1, pilot 2. Like, Gun, how do you think? How is it going to affect Vietnam on this? I mean, I know that this will be a very long answers. Are you able to give us some like high level hints, and then maybe you can tell us with are you going to do another seminar on that?
Discussion on Pillar 1 and Pillar 2, like you said, is very long, and how Vietnam are going to react to the development of Pillar 1, Pillar 2 is still unknown. We have contacted our contacts in the policy development department in the MOF, and they still prefer to keep it secret. But just a point that I can highlight here is that because Vietnam is only a member of the inclusive framework, so it is not required to adopt the entire principle. I mean, all of the principles in Pillar 1 and especially Pillar 2. So yeah, that is what we are expecting. the only rules in Pillar 2 that may benefit Vietnam, which is the subject to tax rule, that is quite beneficial to developing countries like Vietnam, and also the adoption of the concept of Pillar 1 would be expected to be adopted by the Vietnamese government for the entire rules of the other for the entire other rules of Pillar 2 may not be adopted by the Vietnamese government because it's only beneficial to the developed countries.
But anyhow, it will have impact on the holding company level in other countries, right?
Yep. Like for example, the income inclusion rules. If I'm going to explain what income inclusion rules here would take another like 5-10 minutes. But yeah, it's a concept for the parent company, for the tax authority of the parent company to collect more tax if the group level does not pay the tax worldwide up to a certain percentage. In the recent meeting of G20 and the inclusive framework members, it's already been agreed that the global minimum tax rate would be at least 15%. So if an M&E does not pay up to like 15% worldwide or from a country by country basis, then they may have to top up the taxes at the ultimate parent company level.
Very interesting. I think if the audience want to know more about that, maybe stay tuned for HKBAV or notification or even Deloitte notification. We might have a webinar very soon. Right, I think our time is up, and thank you very much for all the questions. And for those that we have not answered, we'll try to email separately to you. And if you have further questions, feel free to contact any one of us in this webinar. So Vinny, do you want to do the closing?
Yes. I am so ready after the 90 minutes worked out with all of you. Thank you so very much. I have never had a bunch of speakers who are so on time with all the presentations, and it is just great. And thank you, Brian, for asking additional questions to make things even more interesting. Well, once again, to the audience, the slides and the recording of the event will be available on both Deloitte and HKBAV website and YouTube channels in the next 48 hours. Now it's time for me to do a little bit of advertising. There are still 2 days left where Hong Kong Business Association Vietnam will match any donation to the CanCham Rise for Life program, assisting those most in needs in outlying areas of Ho Chi Minh City during this difficult time. Go to our webpage or our fan page on Facebook or LinkedIn account for more information. Hong Kong Business Association Vietnam will match every donation that comes in until Friday, 4 p.m. So far, we have already transferred 100 million to the efforts, and just this morning, we have received a $5,000 donations from Vina Capital Foundation, in which we will match also. So a lot of people will be taken care of. Thank you for all of you. If there is a topic you'd like to hear from Hong Kong Business Association and Deloitte, and other than Deloitte, please let us know. Or if you'd like to be a featured speaker in our future events, you're always welcome to contact us for a discussion also. And until then, see you all again soon, and hopefully in person. And until the next Deloitte seminar or HKBAV seminar, thank you today for coming. And we will see you all again very soon. Hope that you have enjoyed this as much as I have. See you again next time. Thank you, speakers.
Thank you. Bye.
Thank you, and bye, everyone.